U.S. economy is on edge. A 90-day truce with China just bought us time. Oil prices are jumping. Wall Street could see a 10% drop, and a top economist warns a recession may be closer than you think. In the next 10 minutes, I'll break down what's happening, why it matters for your wallet, and the numbers you need to watch right now. Let's get into it. Good morning and welcome to your U.S. Economy Update for Tuesday, August 12th, 2025. Today, we've got 4 major headlines you need to know. The United States and China extend their tariff truce by another 90 days, keeping trade tensions in check for now. Oil prices jump on renewed optimism, but will that hit consumers at the pump? A leading economist warns that recession risks are growing fast. And Wall Street faces the possibility of a major market correction. Stick around, we'll break it all down, explain what it means for your wallet, and give you the key numbers you won't hear everywhere else. Let's start with the big one. The United States and China have extended their tariff truce by another 90 days. This means that neither side will increase tariffs during this period, avoiding what could have been a major escalation in trade tensions. Markets responded quickly. Asian markets closed higher overnight, and U.S. futures are looking more stable ahead of opening. Why it matters. Businesses now have a bit more certainty for the next 3 months. Import costs for goods like electronics, clothing, and machinery will hold steady for now. It also gives both governments a chance to negotiate longer-term trade arrangements. However, this is just a pause button, not a peace treaty. If talks fail in the next 90 days, those tariffs could still kick in. And if history tells us anything, trade talks can turn messy real fast. U.S. trade volume in 2024 was about $575 billion. Tariff increases that were on the table could have cost U.S. consumers an estimated $35 billion a year. Oil markets also reacted to the tariff extension. Brent crude rose to $66.89 a barrel, and WTI crude is up to $64.18. That's good news for oil producers, but not necessarily for drivers. Gasoline prices often lag behind crude prices by a week or two, meaning we might see a slight uptick at the pump in late August. The optimism is coming from the belief that a stable U.S.-China trade relationship means stronger global demand for energy. But it's not just trade. Geopolitical factors are also at play, including Middle East shipping concerns and reduced U.S. shale output this quarter. So, short-term, expect prices to creep upward. Long-term, that depends entirely on whether the truce holds and global demand stays strong. Next, a big warning from Mark Zandi, chief economist at Moody's Analytics. He says the U.S. is not yet in a recession, but the warning lights are flashing. Here's why. Job growth has been stagnant since May. In July, more than 53% of tracked industries reported job losses. Immigration restrictions are adding to labor shortages in sectors like construction and agriculture. Zandi's take is that if these trends continue, especially alongside trade uncertainty and inflation pressures, the economy could tip into a recession within the next 12 months. Why you should care. A slowing job market means slower wage growth, more competition for available jobs, reduced consumer spending, which makes up about 70% of U.S. GDP. The silver lining, the Federal Reserve still has room to cut interest rates if needed, which could soften the blow. Finally, Wall Street might be in for a shakeup. Analysts at Stifel warned that the S&P 500 could face a 10% or greater correction in the coming months. The reason? Something they're calling money illusion, when people feel wealthier than they really are because their assets are inflated by easy money policies. Add in rising inflation and slowing consumer momentum, and you have the perfect recipe for stagflation, slow growth plus rising prices. That's the exact scenario markets hate. Investors are watching upcoming inflation reports very closely. If the data comes in hotter than expected, it could trigger a quick sell-off. So, to recap, trade tensions are on pause, but the clock is ticking. Oil prices are climbing, which could hit consumers soon. The labor market is flashing early recession warnings, and Wall Street could be facing a correction. Over the next few weeks, keep an eye on tariff negotiations, inflation data, and the Federal Reserve's statements. Those will shape the economic outlook heading into the fall. If you found this breakdown helpful, hit that like button, subscribe for daily economy updates, and drop your thoughts in the comments. Do you think the U.S. will avoid a recession this year, or is it already inevitable?